Let's talk about this morning's sell-off and the situation in China with Evergrande. Joining us now, editor of the Bear Traps Report, Larry McDonald. He's also author of the book, A Colossal Failure of Common Sense, the inside story of the Lehman Brothers, or the collapse of Lehman Brothers. Larry, it's good to see you. We're going to get in the weeds here, and it's you need to do that. Obviously, you need to do that to try to anticipate or at least get clues by putting your ear to the ground. But in doing it, it's going to be pretty arcane. So just try to explain so that everybody can understand what you're talking about. At this point, you're not seeing certain underpinnings indicate that this is going to be a major problem for the global financial system at this point. Why not?
Well, thanks, Joe, and thanks so much for having me on. Big fan of this show for decades. If you're David Tepper, who's a good friend of yours, or a billionaire, and you see risk coming, the first thing that you're going to do is put on the cheapest hedges possible. In other words, you're going to make bets in the world on assets that will protect you from a downfall. So far, we're seeing some of those hedges, but not the way we've seen in the past, like before Lehman or before the China deval crisis in 2015. The bets in certain assets were substantially greater than they are now.
You're talking about you watch credit default swaps, you watch just the volatility of the Chinese currency. Can you go into 3 or 4 of the things that you're talking about, and as I said, explain why it matters?
Well, one of the things I talk about in my book is the U.S. was the global risk epicenter in 2006, 7, 8. So the U.S. banks, in terms of credit default swaps, people buying default protection, they were dramatically underperforming the Asian banks. And in the 2015 China devaluation crisis, it was the other way around, where China was devaluing the currency. There was a big crisis in Asia. In HSBC and Standard Chartered and ANZ Bank, the banks that have the most exposure to Asia, were dramatically underperforming the U.S. banks. Now, if we look at things today, and if you're looking at David Tepper or Bill Ackman or one of these guys, I don't see a lot of transactions in credit default swaps in HSBC, Standard Chartered, ANZ Bank, the big banks that have exposure to the Asia region. To your point, which is a great point, Joe, we are seeing just today and a little bit last week, people are making some bets in the foreign exchange market against the yuan, but the yuan moved a lot more in 2015 before the deval crisis than it is right now. So,
yeah, you're talking about volatility in CNH is what you're talking about, and not a whole lot, but just a little bit of maybe something happening in the last week or so, you're seeing, and that's what you would expect, but nothing that causes great alarm at this point?
Yes, nothing very, very significant. The one thing is weird is the Bloomberg Commodity Index, Joe, made multiple new highs in recent weeks. So think about Bloomberg Commodity Index. It's a basket of 12 plus commodities. So that's making new highs. That's very exposed to China. But within that, what's the most eerie thing I see is Rio Tinto, which is a major miner, which is exposed to China through iron ore and all these other metals. That stock is 30% off the highs, and a lot of that's come in the last 3 or 4 weeks